Business restructuring relief for UAE corporate tax, eliminating tax impact on transfers of business or independent parts. Introduction to business restructuring relief. In specific circumstances, when an entire business or an independent part of a business is transferred in exchange for shares or other ownership interests, business restructuring relief can be applied to eliminate any corporate tax consequences that may arise from such transactions. The availability of this relief ensures that no gains or losses are considered when calculating the taxable income for both the transferor and the transferee. Conditions for business restructuring relief. To qualify for business restructuring relief, all of the following conditions must be satisfied. 1. Legislative compliance. The transfer must be carried out in accordance with, and satisfy all conditions imposed by, applicable UAE legislation. 2. Taxable persons. The parties involved must be resident persons or non-resident persons with a permanent establishment in the UAE. 3. Exclusion of certain persons. Neither party can be an exempt person. Neither party can be classified as a qualifying free zone person. 4. Financial year consistency. The financial year for both parties must end on the same date. 5. Accounting standards. Both parties must prepare their financial statements using the same accounting standards. 6. Commercial and economic validity. The transfer must be undertaken for valid commercial reasons that reflect economic reality. Applicability to individual transfers. An individual can make use of this relief when transferring their business to an incorporated entity, provided all the relevant conditions are met. Treatment of transferred assets and liabilities. When business restructuring relief is applied, the transferred assets and liabilities are treated as being transferred at their net book value at the time of the transaction. This treatment ensures that no gain or loss arises for tax purposes. Notably, this relief is optional, and the transferor can elect to apply it on a case-by-case basis. Both the transferor and transferee must maintain documentation that confirms the agreement to transfer the business at the net book value. Considerations for ownership interests and other forms of consideration. Business restructuring relief applies when a business is transferred in exchange for ownership interests and may also involve other forms of consideration, such as cash. If other forms of consideration are included, their market value must not exceed either the net book value of the transferred assets and liabilities or 10% of the nominal value of the ownership interests issued. Tax implications for transferees. For corporate tax purposes, the transferee will exclude any depreciation, amortization, or change in the value of the transferred assets and liabilities that relate to the gain or loss deferred by the transferor under business restructuring relief. When the assets or liabilities are subsequently realized, the transferee must include any gain or loss not previously recognized for corporate tax purposes, provided it relates to acquisitions to which the relief did not apply. Tax losses in business restructuring. Any tax losses transferred as part of a business restructuring may only be carried forward by the transferee if they continue to operate a similar business or activity after the transfer. This generally means 1. The transferee must continue using some or all of the assets that were employed by the transferor. 2. No significant changes must have been made to the core operations or identity of the business since the transfer. 3. Any changes that have occurred should result from the development or use of pre-existing assets, services, processes, products, or methods. Clawback of business restructuring relief. Business restructuring relief will be clawed back if, within 2 years of the initial transfer, shares or other ownership interests in the transferor or transferee are sold, transferred, or otherwise disposed of, in whole or in part, to a party that is not part of the qualifying group to which either the transferor or transferee belongs. there is a subsequent transfer or disposal of the business or an independent part of the business that was transferred. In these scenarios, the transferor must treat the original transfer as occurring at market value on the date of the transfer and account for any gain or loss in their tax return for the tax period in which the subsequent transfer occurred. If the transferor no longer exists, example, ceases operations or no longer has a permanent establishment in the UAE, the transferee must fulfill any corporate tax obligations related to the deferred gain or loss. Examples of business restructuring relief. Example 31. Business restructuring relief application. Scenario: F LLC, a UAE resident company selling agricultural machinery, transfers its business to Z LLC, a UAE resident company engaged in agricultural machinery repair. In exchange, F LLC receives 20% shares in Z LLC. Valuation details. The net book value of F LLC's business was AED 2,300,000, while the market value of the shares received was AED 2,700,000, matching the market value of the business. Z LLC, which measures assets at fair value, recorded the assets and liabilities of F LLC's business at a net book value of AED 2,700,000 for accounting purposes. Example 32. Subsequent transfer scenario. Scenario: 1 year after acquiring the business, Z LLC sells it for AED 3 million. Since there is a subsequent transfer of the business restructuring relief no longer applies. As a result, F LLC, the original transferor, must treat the original transfer to Z LLC as having occurred at market value, resulting in a gain of AED 400,000, AED 2,700,000, AED 2,300,000 in the tax return for the tax period in which Z LLC sold the business. Tax treatment for transferee: Z LLC. Because F LLC paid corporate tax on the original gain, it does not need to be accounted for by Z LLC. Accordingly, for Z LLC, the taxable gain from the sale is AED 300,000, AED 3 million, AED 2,700,000, following its accounting treatment.